Okay, let's unpack this. Imagine a world where, these big geopolitical strategies, they don't just stay in the realm of diplomacy. Imagine they actually collide head on with the absolute cutting edge of digital currency.
Mm.
Well, today, that's exactly what we're doing. We're diving deep into that fascinating intersection. We're talking Bitcoin mining hardware, global trade dynamics, and maybe surprisingly, the very direct impact high-level politics can have on something as tiny as a silicon chip.
It sounds almost abstract when you put it like that, but it's incredibly concrete when you look at the details.
Exactly. And our main focus today, it's how specific policies, particularly the Trump administration's trade tariffs, are, well, really shaking up and reshaping the whole landscape of U.S. Bitcoin mining.
Yeah.
We've got a stack of recent reports, expert analysis, that gives us this unique window into how economic policy and tech are intertwined right now. So our mission for you, listening in, is to pull out the most important nuggets, the key takeaways from all this information, give you a shortcut, really, to being genuinely well-informed about a story that's frankly much bigger than just one company or one single deal.
And what's truly fascinating here, I think, is watching how these decisions, like a trade tariff on certain goods, things that seem quite distant maybe, how they can send these massive ripples outwards.
Right.
And these ripples, they don't just stop at the border. They go right through these highly specialized global industries. They reach down to the very basic components, the silicon chips, the circuit boards, used for something as specific as Bitcoin mining. It's quite remarkable.
It really is. It's not just numbers on a spreadsheet.
No, definitely not. This isn't some, abstract economics lecture. What we're seeing is a live, unfolding case study. It involves real companies putting down real substantial money, and it impacts the future, the direction of a really key part of the whole crypto ecosystem.
Mhm.
If you sort of zoom out, connect it to the bigger picture,
Hmm.
we're watching economic nationalism play out right here in the tech space.
Yeah.
And the consequences, well, they might seem unexpected at first, but when you trace the logic, they make perfect sense.
Absolutely. And, okay, to kick things off, let's start with a piece of news that really grabbed our attention. It's huge. There's this company, American Bitcoin, and the name itself is interesting. But they also have some, let's say, surprising connections.
Ooh.
Yeah, connections to the Trump family. Specifically, members of the family are backing the company. And they just made a massive, very strategic move in the market.
Okay, so what did they do?
They exercised an option, a big one, to purchase up to 17,280 of those specialized computers we mentioned, application-specific integrated circuits, ASICs.
17,000. Wow.
Yeah, directly from Bitmain, who, as you probably know, is the giant in this space, the world leader in making these things. To be more precise, the main part of this order was a fleet of 16,299 Antminer U3S21 EXPH units, very specific high-end machines.
Ant miners, yeah. The workhorses of the industry, really. But 16,000 of them. That's a serious investment in hashing power.
It really is. And that detail about the backing from members of President Trump's family adds this whole other layer of political context right from the start, doesn't it?
It certainly does. It makes you wonder about the motivations, the connections. But okay, let's focus on the hardware first. ASICs. Maybe we should just quickly explain what they are for anyone who isn't deep in the mining world.
Good idea.
So, application-specific integrated circuits, the name tells you a lot. Unlike the CPU in your computer or the chip in your phone, which are general purpose, ASICs are built for one job and one job only. They're hyper-specialized silicon.
Right. Tailor-made.
Exactly. Custom designed just to solve the incredibly difficult math problems, the hashing algorithms that secure the Bitcoin network and verify all the transactions. Think of it like comparing a Swiss Army knife to a specialized surgical tool. The knife can do lots of things okay, but the tool does one thing perfectly.
That's a great analogy. So these ASICs are incredibly efficient only for mining Bitcoin or similar algorithms. Useless for browsing the web or playing games.
Precisely. They channel all their power into that one task. So this deal, it wasn't just buying computers. It was acquiring these highly tuned, purpose-built engines designed specifically to churn out hashes for the Bitcoin network. A massive fleet of them.
And the combined power of this order, it's staggering. These 16,299 Antminers alone, they can collectively pump out 14.02 exahashes per second.
Exahashes. EHs.
Yeah, EHs. And just to give people a sense of scale, an exahash is a quintillion hashes. That's a 1 followed by 18 zeros.
It's almost impossible to visualize.
It really is. So we're talking 14 quintillion calculations every single second, just from this one order, all aimed at solving Bitcoin's puzzles.
That's a significant addition to the global hash rate, a noticeable chunk.
Absolutely. It's like, I don't know, adding a small country's worth of supercomputing power, but all laser focused on one task. And the price tag for this immense capability, around $314 million. That's according to industry reports, specifically the Miner Mag.
300 million. Okay, so a major capital expenditure.
Definitely. But here's where it gets really interesting, politically and economically. It's this crucial detail from the source material. The deal specifically, quote, excluded any potential price increases from the Trump administration's sweeping trade tariffs and import duties, which will impact Bitmain mining hardware manufactured in China.
Ha, there it is.
Right. So what does that tell us? This isn't just a big shopping trip. It's a purchase being made very carefully under these specific, politically charged economic shadows.
That clause, the one excluding potential tariff-related price hikes, that's incredibly revealing. It speaks volumes.
How so?
Well, it shows a very clear, a very proactive awareness within the negotiations. They knew about the potential impact of U.S. trade tariffs on goods coming out of China, specifically this hardware.
They were anticipating it.
Absolutely. For American Bitcoin, it looks like a highly strategic maneuver. Lock in the price before those import duties really start to bite. It just underscores how significant these tariffs are perceived to be within the industry, how much they affect the basic economics of buying the necessary equipment.
So it wasn't just a standard footnote in the contract.
I highly doubt it. Clauses like that, especially for such high-value specialized tech, they suggest a sophisticated understanding of geopolitical risk. It's about managing that risk. They basically secured their capital expenditure for this huge fleet of machines, insulating themselves from potentially massive cost increases down the line if those tariffs hit hard.
So it's a form of financial hedging almost against future policy changes.
In a way, yes. It's certainly risk mitigation. It secures their operational costs, at least on the hardware acquisition side, and their future hashing power at a predictable price point.
Which must give them a leg up on competitors, right, if others have to pay the tariff-inflated price later.
Potentially, yes. It gives them greater certainty in their financial projections, their return on investment calculations. They know what these machines cost them, regardless of what happens with tariffs next month or next year. This brings up a really interesting question, though. Is this just a one-off, a cleverly negotiated deal because of, specific players involved? Or
is it a sign of something bigger?
Exactly. Does it signal a deeper shift in how companies globally are going to approach buying critical technology in an era of rising trade barriers and, frankly, protectionism? It definitely points to companies getting much smarter or needing to get smarter about managing supply chain vulnerabilities, thinking much harder about where things are made, the political climate there, and how to write contracts that protect them from sudden policy shifts.
It seems even in something as decentralized as Bitcoin, the old rules of global politics still cast a very long shadow.
They absolutely do. You can't escape the physical reality of where these machines are manufactured and the trade policies that govern their movement.
Okay, that makes perfect sense. And that idea, the idea of these deeper shifts, it leads us perfectly into the next really fascinating part of the story. We've talked about the buyer, American Bitcoin, and how they navigated the tariff issue.
Yeah.
Cleverly, it seems. But what about the other side? What about the manufacturers themselves? The giants like Bitmain? Because, it's one thing for a buyer to negotiate a clause. It's something else entirely for the supplier, the world's biggest supplier, to fundamentally change its whole global strategy in response.
Right. And that's precisely what seems to be happening, a truly major strategic pivot.
So how are these massive trade tariffs impacting Bitmain directly?
Well, the impact seems profound enough that Bitmain, the undisputed heavyweight champion of mining hardware, they announced a really dramatic shift. It's a direct reaction to these ongoing tariff pressures. They're not just tweaking prices or offering discounts. They're fundamentally rethinking where they build their products.
Okay, so what's the plan?
It's huge. The source details it clearly. Bitmain is planning to open its very first ASIC production facility inside the United States.
Wow. Manufacturing ASICs in the U.S.
Yes, with a target to be operational by the end of 2025. And it's not just a factory outpost. They also plan to set up a full U.S. headquarters.
A headquarters, too. Whereabouts?
The leading candidates mentioned are either Florida or Texas, states known for being generally business-friendly.
Okay, let's just pause on the significance of that. Bitmain, the company with, as we said, something like 80% of the global market, dominant.
Utterly dominant.
And they're making this massive geographical shift, moving production for a key market into that market. This isn't a minor tweak.
No, it's a seismic shift in their operational strategy. It's a complete strategic realignment, moving the actual manufacturing, the core of their business for the U.S. market, onto U.S. soil.
It really speaks volumes about how much those tariffs must be hurting or how much they expect them to hurt their competitiveness in the U.S.
Absolutely. This move by Bitmain, it's probably the most direct, most tangible consequence of the tariff policy we could point to. Think about the basic economics. Tariffs are taxes on importing goods. Simple as that.
Right. They make imported stuff more expensive.
Exactly. That cost usually gets passed down the chain, making the final product more expensive for the buyer, in this case, the U.S. miners. So by building a factory inside the U.S., Bitmain effectively sidesteps those import taxes entirely for the machines sold within the U.S.
Ah, okay. So they avoid the tariff altogether on U.S. sales.
Precisely. This makes their products inherently more cost competitive in the very important U.S. market. Even if, and this is a big if, even if their production costs in the U.S., things like labor, energy, regulations, are higher than in China or Southeast Asia, where they traditionally manufacture.
So they're making a calculation, the cost of the tariff versus the cost of setting up and running a U.S. factory.
That's exactly it. It's a classic business response to a changing policy landscape. They're doing math, weighing the long-term burden of tariffs against the undeniable upfront costs and operational hurdles of building brand new manufacturing capabilities on a different continent.
And the fact they're doing it suggests the tariff burden is, or is expected to be, very significant.
It strongly suggests that yes, in their calculation, setting up shop in the U.S., despite the challenges, is the better long-term play for maintaining their market share and profitability in the U.S.
It's a really powerful example of how trade policy can literally redraw the map of global manufacturing.
It really is. It's forcing international companies to become, in a sense, domestic players to remain competitive in certain markets.
Now, our source also mentioned something about strain at all levels of the Bitcoin mining supply chain caused by these tariffs and other macroeconomic factors.
Mm-hmm.
Can you break that down? What does that strain feel like for the people involved?
Sure. That strain isn't just one thing. It's a combination of pressures. Cost is obviously a big part of it. Higher prices for essential hardware.
Right. Eats into miner profit.
Directly. But it's also about uncertainty. These global supply chains were optimized for efficiency over decades. Tariffs throw a huge wrench into that. So for miners, the strain means maybe not just higher costs, but also longer waiting times to get new machines. Makes it harder to plan upgrades or expansion.
Adds unpredictability.
Huge unpredictability. And that affects investment decisions, everything. For manufacturers like Bitmain, the strain is about fundamentally reevaluating their logistics. Where can they actually build these things efficiently and get them to customers without facing crippling taxes or delays? Their whole model is challenged.
And it's not just tariffs, right? The source mentioned other macroeconomic pressures.
Correct. You've got things like global inflation affecting component costs, energy price volatility, which is critical for both manufacturing and mining, plus maybe lingering disruptions from the pandemic era. The tariffs are like pouring fuel on an already smoldering fire of supply chain challenges.
Got it. And importantly, this isn't just Bitmain acting alone, is it? Is this a wider trend?
That's a really key point the source makes. It explicitly states that the tariffs have spurred the leading mining hardware manufacturers to consider relocating at least a portion of their operations to the U.S.
So MicroBT and Canaan might be thinking along similar lines.
It suggests they're at least considering it, that Bitmain's move isn't happening in a vacuum. It's potentially part of a larger trend. We're seeing this move towards reshoring, bringing manufacturing back home, or nearshoring, moving it to closer, maybe politically friendlier countries.
And that's driven by more than just tariffs.
Yeah, I think so. Tariffs are a big driver here for sure. But there's also this broader desire, post-pandemic and amidst current geopolitical tensions, to make supply chains more resilient, less vulnerable to disruption.
Right, less reliance on potentially unstable or distant manufacturing hubs.
Exactly. So you have this tension now. For years, it was all about global efficiency, find the absolute cheapest place to make something, wherever it is.
Lowest cost wins.
Right. But now there's this growing counter-pressure focused on national security, economic independence, supply chain security. It favors domestic or nearby production, even if it costs a bit more.
That shift could have really profound long-term consequences, way beyond just crypto mining hardware.
Immense consequences for how innovation happens, where manufacturing expertise resides, global trade patterns. It's a potential reshaping of the global economic order.
Okay, so we have these massive shifts happening, driven by tariffs, affecting buyers and manufacturers.
Yeah.
To really get our heads around the impact, we need to understand the structure of this market itself. You mentioned Bitmain's dominance, but just how concentrated is this industry? It's not like, say, the smartphone market with lots of players.
Oh, not even close. The concentration is extreme, really quite staggering when you see the numbers. There was a major study by the University of Cambridge. They do excellent work tracking the crypto space, and they found that over 99%, let me repeat that, over 99%
Wow.
of all the Bitcoin mining hardware currently hashing away on the network comes from just 3 companies.
3 companies control basically the entire global supply. Who are they again?
Bitmain, by far the largest. Then MicroBT, known for their WhatsMiner machines, and Canaan with their Avalon miners. That's basically it.
3 companies for a global multi-trillion-dollar asset class.
Yeah.
That's kind of mind-blowing.
It is. It highlights a significant choke point in the ecosystem.
And Bitmain, as we keep saying, isn't just one of the 3. They're the gorilla in the room. What was their market share again?
The source pegs it at about 82%. 82% of the entire global market for Bitcoin mining hardware belongs to Bitmain.
So when Bitmain makes a move, like setting up a factory in the U.S., it's not just a manufacturer moving, it's the manufacturer, effectively.
Yeah, precisely. Their decisions have an utterly disproportionate impact. They can dictate availability, they heavily influence pricing trends, they set the pace for technological upgrades through their R&D.
So if they decide to focus production in the U.S. or change their pricing strategy because of tariffs, that wave hits almost every miner globally.
Instantly, it sends ripples across the entire industry. It also, frankly, highlights a vulnerability.
How so?
Well, what happens if one of these 3 companies, especially Bitmain, faces a major disruption? A fire at a key facility, a specific geopolitical sanction, a sudden regulatory crackdown in their home base.
The whole global supply chain for new miners could just seize up.
Potentially, yeah. Or prices could skyrocket overnight. That level of concentration creates fragility, even in a network like Bitcoin that's designed to be decentralized at the protocol level. The hardware layer is surprisingly centralized.
That's a really crucial point. The decentralization of the network versus the centralization of the hardware production. Okay, so this extreme concentration sets the stage for why these U.S. tariffs are such a big deal, which brings us right back to the core debate around the Trump administration's strategy. Using tariffs to try and bring manufacturing back, specifically aiming to reshore this crypto hardware industry. As the source notes, this strategy is met with mixed reactions. It's not universally seen as a guaranteed win.
Far from it. The goal itself, bringing manufacturing and jobs back to the U.S., strengthening domestic tech capabilities, is pretty clear, and you can understand the political appeal.
Sure. Made in America for critical tech.
Right. But the method, using broad tariffs, has drawn significant criticism. People worry about the unintended consequences. The critics argue that these kinds of policies, while aiming for domestic growth, can end up being inflationary in the long term, making things more expensive for everyone. And, more pointedly, that they could actually backfire and achieve the opposite of the intended goal.
How could they backfire?
Well, we have some specific arguments here. Jaron Mellerud, who runs a mining company called Hash Labs, so he's right in the thick of it, he offers a really sharp critique.
Okay, what's his take?
His argument is quite logical, if a bit counterintuitive to the policy's stated aims. He suggests that if these tariffs significantly jack up the price of ASICs for miners operating in the U.S.,
making it more expensive to set up or upgrade a mine in America.
Exactly. If that happens, he predicts a potential collapse in demand from U.S. miners. The economics just might not work anymore for many of them. Mining is often a thin margin game.
So U.S. miners stop buying the tariff-inflated machine.
That's the fear. If the cost of your main capital expenditure, the ASICs, suddenly jumps 20–25% or whatever the tariff is, your whole business model might break.
Okay, so demand drops in the U.S. Then what?
Then, Mellerud argues, the manufacturers like Bitmain, even with their potential U.S. factory, are left holding a lot of expensive inventory they can't sell in the U.S. market. Excess supply.
Got it. Machines built, but no U.S. buyers at that high price.
Right, so what do? They need to sell them somewhere. Mellerud predicts they'll end up having to export to other countries at cheaper prices.
Cheaper prices? Why cheaper?
To clear the inventory. Basic supply and demand. If you have a surplus you can't sell in one market, you might discount it heavily to sell it elsewhere, just to recoup some cost or move the units. It's sometimes called dumping inventory, though that has specific trade definitions.
Okay, so U.S. miners face high prices. Demand falls here. Manufacturers sell the excess machines cheaper outside the U.S.
That's Mellered's prediction. And the kicker is
Let me guess. This makes mining outside the U.S. more attractive.
bingo. His ultimate concern is that this whole scenario would drive mining back to other countries. Miners in, say, South America or Central Asia could potentially get the latest hardware cheaper than miners can.
Placing U.S. miners at a serious competitive disadvantage.
Exactly, which ironically is the complete opposite of the administration's stated goal of reshoring the crypto industry to the United States.
Wow. So the policy aimed at helping U.S. mining could end up hurting it by making competitors elsewhere stronger.
That's the potential unintended consequence Mellered highlights. It's a really stark illustration of how economic policies can have complex, sometimes paradoxical, effects in a globalized market.
You try to build a wall, but it ends up potentially pushing activity outside the wall where costs are lower.
It's a possibility, yeah. It depends on how elastic the demand is, how manufacturers react, energy costs elsewhere, lots of variables. But it shows the danger of assuming a simple cause and effect relationship. When you hear about these big policy goals, it's always worth asking, okay, but what else might happen? What are the second and third order effects? How will the actual market players acting in their own self-interest respond?
Because the market doesn't always react the way policymakers intend or hope.
Almost never perfectly, especially in complex global industries like this one. The interplay between policy intent and market reality is always dynamic and often produces surprises.
What a fascinating journey this has been. We've really covered a lot of ground. Just thinking back, we started with a specific trade policy, these Trump administration tariffs. We saw how that likely influenced a massive multi-million-dollar hardware deal by American Bitcoin, structured specifically to avoid those tariffs.
The exclusion clause.
Exactly. Then we saw the ripple effect, hitting the giant manufacturer Bitmain, prompting them to make this huge decision. Building a factory and headquarters right here in the U.S., a direct response to policy pressure.
A major strategic shift.
Definitely. But then we also explored the flip side, the critique, voiced by people like Jaron Mellerud, that despite the goal of reshoring, these very tariffs could make U.S. miners uncompetitive, potentially pushing the industry away from the U.S. in the long run.
The potential backfire effect.
Right. It's this incredibly complex dance, isn't it, between high-level politics, trade policy, cutting-edge technology, corporate strategy, and just the fundamental realities of global economics. Hopefully for everyone listening, this deep dive has connected some dots, maybe revealed some surprising facts, and given you a much clearer, more nuanced picture of the forces shaping the Bitcoin mining world today. It's way more complex than just the price of Bitcoin.
Absolutely. These underlying dynamics, hardware, energy, policy, they are fundamental.
And just thinking about that paradox again, a policy aimed at boosting domestic industry, potentially leading to a competitive disadvantage for that same industry.
Yeah.
It really underscores the challenges of navigating economic strategy in our interconnected world. It's something to really chew on. And hey, before we get to the final thought, just a quick word. If you found this deep dive interesting or valuable, if you learned something new, well, first off, thanks for tuning in. And second, if you could take a moment to subscribe, maybe leave a comment or share this with someone else who might find it interesting, it honestly makes a huge difference.
It really does.
Yeah, your engagement helps us show up in algorithms, reach more people who are curious about this stuff, and fundamentally, it lets us keep dedicating the time to researching and putting together these deep dives for you. So thank you for that support. It's genuinely appreciated.
Okay, so maybe building on that complexity and those potential paradoxes.
Yeah.
If we connect this all to the really big picture, this whole situation, the tariffs, Bitmain's move, the potential impact on U.S. miners, it throws a fascinating question into sharp relief, doesn't it?
What question is that?
It's about the entire future trajectory of global supply chains for all kinds of critical technologies, not just ASICs for crypto. We're seeing this clear trend, this push towards reshoring, towards prioritizing domestic production, driven by national security concerns, economic nationalism, call it what you will.
Right. It's happening across different sectors. Semiconductors are another big one.
Exactly. So the question is, how will this ongoing shift reshape not just the dollars and cents economics of industries like crypto mining, but the actual global distribution of technological innovation? Where will the next breakthroughs happen? How does it change the balance of manufacturing power and maybe even economic and political influence around the world?
So if production becomes more localized, does innovation also become more fragmented? or concentrated in fewer geopolitical blocs?
That's the multi-trillion-dollar question, isn't it? And think about what other industries might be next. We mentioned chips. What about pharmaceuticals? Key components for renewable energy, like solar panels or batteries, advanced materials.
All potentially subject to the same pressures, tariffs, reshoring mandates, supply chain security concerns.
Precisely. And how might that eventually impact you listening right now? As a consumer buying goods, as an investor looking at companies, as a worker in one of these industries, or even just as a citizen observing the shifting geopolitical landscape,
It's a huge ripple effect, potentially touching almost everyone.
it could be. So there's always more to dig into, always more to learn. And really considering these different angles, especially where high stakes policy decisions crash into the hard realities of the global market, that's how we build a richer, deeper understanding of the complex world we're navigating.